Hey everyone, welcome back to Corporate Decoder. Today, PEMEX just filed its quarterly report, and I am seeing some serious signals about its financial health. Quick note, this is not financial advice, just my take on public filings for educational purposes. PEMEX continues to lean heavily on Mexican government support to stay afloat, and that is a trend we need to unpack. Alright, let's dive into what Petróleos Mexicanos, or PEMEX, has been up to. This is a massive state-owned oil and gas company, and their latest report gives us a snapshot of how things are looking in the first part of 2026. First up, let's look at the money coming in. For the first 3 months of 2026, PEMEX brought in 365.7 billion pesos. That is a drop from the same time last year when they made over 395 billion pesos. So overall revenues are down by about 7.5%. Why the drop? A big reason is their export sales, especially for crude oil. They sold about 38.8% less crude oil internationally. Even though the price per barrel of their exported crude oil was slightly higher at $67.83 compared to $67.8 last year, the sheer volume decrease hit them hard. On the flip side, their domestic sales actually went up by about 4.2%, reaching over 248 billion pesos. This increase was thanks to selling more Magna gasoline, diesel, and liquefied petroleum gas within Mexico. But, and this is a big but, the average prices for some of these, like Magna gasoline and liquefied petroleum gas, actually went down. Now, let's look at what it cost them to make that money. Their cost of sales went down by about 6.5%, which sounds good. This was mainly because they bought fewer hydrocarbons and had a decrease in inventory costs. But here is where it gets tricky. Their depreciation and amortization costs actually went up by over 7 billion pesos. And then there is the impairment of their assets. This means they had to write down the value of some of their wells, pipelines, and equipment. This number jumped significantly from about 5.6 billion pesos last year to over 14 billion pesos this year. This was largely due to issues in their industrial processes and energy transformation segments, likely caused by plant shutdowns and raw material supply problems. Imagine having to say your equipment is suddenly worth much less because it is not working right or you can't get the materials to run it. That is a serious red flag. All of this boils down to the bottom line. PEMEX reported a net loss of about 46 billion pesos for the first 3 months of 2026. This is actually a bit worse than the net loss of about 43.3 billion pesos from the same period in 2025. So, they are still losing money and the losses are growing. Looking at their equity, it is a sea of red. Their total equity deficit is a staggering 1.89 trillion pesos as of March 2026. It is like they owe way more than they own. This negative equity has been a long-standing problem and it is a major indicator of financial distress. So, how are they staying afloat with all these losses and negative equity? The Mexican government is stepping in. PEMEX received a massive 58.3 billion pesos in equity capital contributions from the government in just the first 3 months of 2026. This is essentially the government injecting cash directly into the company to keep it running. And it is not stopping there. An additional 42 billion pesos were contributed between April and mid-June 2026. Without this constant government lifeline, PEMEX would likely be in a much worse situation. Let's talk about their liquidity, which means how much cash and easily accessible funds they have. As of the 31st of March 2026, their liquidity was about 247 billion pesos. This is up slightly from the end of 2025, where it was around 237 billion pesos. While an increase is good, it is important to remember this liquidity is partly reliant on credit lines, and as we've seen, government infusions. Their cash flow from operating activities was also down in the first 3 months of 2026, coming in at about 29.9 billion pesos compared to over 43 billion pesos in the same period of 2025. This means the core business is generating less cash than before. PEMEX is still investing in its future with a capital expenditures budget for 2026 that is around 127 billion pesos. They've already spent about 25.9 billion pesos of that. This spending covers exploration, refining, and other operations. Now, let's look at what they're actually producing. Daily liquids production increased slightly by 2.5%. Natural gas production saw a pretty healthy jump of 11.9%, mainly thanks to new fields like Ixachi, and their production of refined petroleum products shot up by over 21%. This was driven by better refinery operations, including the new Olmeca refinery coming online and improvements at the Tula refinery. It seems like they're getting more efficient at turning crude oil into usable products. Their Deer Park refinery in the US also had a good quarter. increasing its production of petroleum products by 7.1%. So while the upstream oil and gas side might be struggling with export volumes, their refining and product side appears to be showing some strength. Now for the big one, the report flags significant doubt about PEMEX's ability to continue as a going concern. This is a serious warning. It means there is substantial uncertainty whether the company can meet its financial obligations and continue operating for the foreseeable future. This is due to those recurring net losses, the massive negative equity, and their heavy reliance on government support. It is like saying, we're not sure if we can stay in business without major help. PEMEX also carries a significant provision for plugging wells, which is the cost of closing down oil wells safely. This provision stands at nearly 129 billion pesos. They also have substantial provisions for ongoing lawsuits and environmental costs, adding to their financial burdens. When it comes to managing financial risks, PEMEX uses derivative financial instruments. However, in the first 3 months of 2026, these instruments actually cost them nearly 10 billion pesos, a big shift from the 1.8 billion pesos in income they saw in the same period last year. This was mainly due to changes in the value of their cross, currency swaps, and other options. A large chunk of PEMEX's debt, almost 90%, is in foreign currencies. So when the Mexican peso weakens against other currencies, it makes their debt more expensive to pay back. In this quarter, they reported a foreign exchange loss of about 8.9 billion pesos. Which was actually an improvement compared to the 15.1 billion peso loss last year, partly because the peso depreciated less. PEMEX is involved in a lot of lawsuits. There is a really old one dating back to 2011 with EMS Energy Services, and it is still being battled out. They're also facing claims from Microsmart Systems DMX Eco for hundreds of millions of dollars. They've set aside reserves for some of these, but the outcomes are always uncertain. These legal battles can be a major drain on resources. Looking at events after the reporting period up to mid-June 2026, PEMEX saw the Mexican peso appreciate against the US dollar, which is generally good for their debt but can hurt their export revenues. And importantly, the government continued its equity contributions, showing that this reliance is ongoing. So, what is the story here? PEMEX is in a tough spot. They're producing more refined products and natural gas, which is positive, but their core crude oil exports are down and they're still losing a lot of money. The company's survival hinges heavily on continued government financial support, and that is a big risk. The going concern warning is the most critical takeaway, signaling they're in a precarious financial position. For investors, this picture is a strong reminder of the risks when a company is so dependent on external factors like government policy and volatile commodity prices. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.